Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about BKLN, which comes to us from Invesco. This is all about bank loans, or as they might call them, senior loans. So we'll take a look at this product, which is pushing up near a 10% yield now. A little bit higher risk, a little bit higher reward. So is it time, with higher for longer on the table, to look at something like this? If that is what you're looking for, please stick around. So if you're in the camp of higher for longer, but not necessarily going much higher than we are right now, this might be a decent product for you to consider. BKLN from Invesco is a senior loan ETF. The fund will invest its assets in Morningstar LSTA US Leveraged Loan 100 Index. Wow. Say that 10 times fast, but senior loans are senior secured variable rate loans from non-investment grade corporations, and they are senior to other debt. These are all important factors. And secured by company assets, also important. So yes, this is more risky and defaults will occur. However, since these loans are first in line, if the underlying company was to fail, the assets of the company would often cover a portion of the loan. These loans, as mentioned, are variable and based off of SOFR now, but which is the new LIBOR, right? Which is all fun bank language that boils down to these rates closely track the federal funds rate. So with rates on the rise, we see BKLN pushing up towards a 9 to 10% distribution yield. And that's the good news. Now, how about the bad news? Well, when default occurs with a senior loan, because they will occur, we do have a recovery rate that will determine how much we will get back based on the collateral in the failing company. In other words, not all is lost. Historically, investors are actually better off with senior loans versus high yield bonds. So if you're comfortable investing in high yield bonds, this may be a way to diversify your risk. Now, I am a big believer in diversification. I have assets spread out all over the place. That includes my bond holdings. I've got everything from conservative bond holdings to higher risk, higher reward bond ETFs. In this case, I'd put that into this category, but I don't have anything quite like this. So for me, it's one more way to diversify and add a little bit of yield to my portfolio. The fund itself does have a fairly high expense ratio of 0.65% or 65 basis points. Does pay monthly distributions, and while the yield shows 8.48% based on the past 12 months, the recent distributions push it close to about a 10% yield, at least while the Fed funds rate stays at its current level. This fund currently has 239 different holdings, with the largest holding being 1.6% of the portfolio. So I would say that's pretty well diversified. And by the way, all the information you see here is from Seeking Alpha. I am a Seeking Alpha affiliate. There's a link down below in the description. If you like what you see, sign up, join us, come along for the ride. Now, if we take a closer look at the recent distributions, we're going to see that the yield is on the rise. This is a chart of the distributions over the last 10 years. This, at the end here, is the effect of rising rates over the last year. Again, it will follow the federal funds rate. So if that continues to rise or starts to decline, the yield will follow. However, the ETF price should not fluctuate too much unless there is a significant default issue. And why do I say that? Well, an interesting aspect with this product is that senior loans have little interest rate risk. The loans tend to be short enough not to have interest rate risk. In this case, most loans are due within 5 years. So if we look at the recent performance of TLT, for example, which is the long-term treasury ETF that everyone has been talking about, including me. See my recent video above about TLT. And we compare that versus BKLN over the last year, we're going to see very little reaction from BKLN, while the long duration bonds in TLT have dragged that ETF lower. That long duration exposure in TLT, with all those low paying bonds, those old ones that nobody wants anymore, is driving the price of TLT into the dirt. And if we look at total return over the last year, we're going to see about a 20% gap in performance over the last year between these two products. And for comparison's sake too, here is a chart showing BKLN in orange, BND, the total bond portfolio, HYG, a popular corporate bond ETF, high yield, and TLT over the last 3 years. This is total return. And kind of see the performance here. This isn't a judgment of one over the other, But over this 3-year period of time, BKLN with its higher risk has actually outperformed these other three based on our current environment. So with all that said, why would I consider an investment in BKLN? Well, I'd be doing this myself for the diversification, for that attractive yield, and a belief that the default rate will not be excessive. So if you're buying this, you're betting on the US market holding together, not necessarily blowing it out of the water, but holding it together. If you think interest rates are near a top and we go another 0.5% total higher, that's fine. But if we get out of control, if we can start going up to that 9, 10, 11, 12% that I've heard whispers about, well, that would be very difficult for a fund like this. It'd be interesting to see where that carries forward with this. So what camp are you in? So I currently do not own any shares of this product, but I am considering adding a small position to my portfolio. They do offer options as well, but volume is extremely low, but it's something that I will still check out to see if I can do anything with options in BKLN. I'd love to hear your opinion on this product. Let me know down in the comments. If you like this type of content, please like and subscribe, and we'll see you next time. Have a great night.